Today, I want to see what advice different AIs offer for Lego investing in 2026. It is no joke that AI is becoming a prominent tool that investors and traders are using to make financial decisions. We're seeing AI trading bots, AI crypto bots being used, and also AI being used to conduct quantitative analysis for investing in different stocks and stuff. But I want to see if AI can offer a good opinion for Lego investors. Now guys, before I do start this video, I want to say that you should be very careful when taking advice from AI and also just from any human in general. Be very careful when you're taking financial advice and make sure to do your own due diligence. I'm going to take everything the AI says with a pinch of salt, and I'm still going to do my own research separately when I'm making my decisions. But I thought it could be a cool idea to see AI's reasoning, where it's pulling sources from for making its decisions. So I want to take you guys through it. So for the purpose of this video, I will be using 3 different AIs and comparing their responses to various prompts. I'm going to be using ChatGPT, Gemini, and also Grok. I don't have the paid version of these, so I'm just using the free version, so it will be accessible to anyone, but using a paid version might give different results. So anyway, let's jump into it. I'm going to pop up the screen. I'll put myself in the corner. So as you can see guys, the first prompt that we put in was, what are the best Lego sets to invest in for 2026 and why? So we're starting off with ChatGPT. It's gone for number 1, the Eiffel Tower, and 10349. Let me quickly check what that is. I'm just looking at ChatGPT's first recommendation, and I'm really confused because 10349 isn't retiring this year, and 10345 is the wrong set number for the Eiffel Tower. The Eiffel Tower is technically retiring, but it's just giving me the wrong set number, which makes me feel like it doesn't really know what it's talking about. But it's also referenced this article from Alibaba, which again has the wrong set number on. I don't really know anything about this site, but I know they sell like fake Lego, so I don't know how I feel about that. Anyway, moving on. The next one is the Millennium Falcon and Jabba's Sail Barge. And the reasoning, again, it's referenced Alibaba. This is another reference from Investor Brick. Let's have a look at this. Okay, so this is a good article to look at, I would say, because it's referencing the minifigure value of the sets and giving statistics like saying that the Willy Wonka set, 66% of RRP is in minifigure value again. So, you know, this is good reasoning. I like this, and I do think the sail barge will be a good investment. Let's continue to have a look. So we've got the Gringotts Bank, a couple Marvel sets. Again, one of its major reasonings is the minifigure value of the set, which I do think is sound reasoning, guys, because obviously at that point, if the minifigure value makes up a large percentage of the set, it does likely mean that those figures will continue to rise after the set retires, and it also provides a kind of like a floor for the set. So it's going to be like minimum price is going to be the cost of the minifigures at least, right? Okay, we've got the 2 botanical sets here. Again, guys, this is really confusing to me. The botanical collection, Orchid and Hummingbird, aren't retiring this year, so really confused about that. Oh, interesting here. So sets that retire are the most proven drivers appreciation recent examples. Okay, interesting. Right, so now it's giving us investment tips. We won't focus on that. Okay, so overall, from this prompt, guys. Now, the thing is with AI is it's very dependent. The output that you get is very dependent on the prompt that you give it. So this was a very basic prompt, just saying what are the best Lego sets to invest in for 2026 and why. So very basic prompt, but the output it's giving me is poor. Like half the sets weren't even retiring this year, and there was a few good shouts, but like the wrong set number referencing Alibaba. I'm not pleased with ChatGPT's response. Moving on to the same prompt but with Gemini. So as you can see, we put the same prompt in. Let's see what Gemini says. Right, so this seems a bit better. So we've got high-profile sets that are likely to see significant appreciation due to exclusive minifigures or unique licenses. Sound reasoning there. So we've got the UCS Millennium Falcon. Then we have not like crazy reasoning, but the D&D. Yeah, so this is a good investment. The D&D Red Dragon's Tail, because it is the only Dungeons and Dragons set at the moment, and Dungeons and Dragons have a great fan base. We've got the X-Man Mansion. So we got the heavy hitters, you know, the ones that when you look at the retirement list, these are the heavy hitters that we want to be investing in. And then we have sleeper hits. Okay, so we've gone for Optimus Prime. We've gone for the Fast and Furious. Okay, so it's recommended some themes for us to watch, which is good. I do think that especially Pokemon and Formula One will be ones to watch out for, and they will continue to grow. Especially with Formula One, the amount of sets that Lego seem to be planning to release for that theme, especially like pointing towards 18 plus sets, and the amount of people who are interested in Formula One does make me think that this will be a theme to watch out for. I mean, we've already seen, I think it's the Kick Sauber car, it's jumped up to like £40 on eBay after retirement, which is crazy. Okay, so strategy tips. We've got watch the July 31st window. And as you guys would have seen in one of my previous videos, I did mention this, so I do agree with Gemini's reasoning here. So again, similar to ChatGPT, it's put a big emphasis on the minifigure value, and you know, kind of mentioning how some of these bigger sets, the exclusive minifigures, end up being worth more than 50% of the total set value. Condition. Okay, a nice little disclaimer saying this is not financial advice. Okay, lastly, let's just check on what Grok is saying for this prompt. So it's giving us some themes. Okay, the ATTE Walker. So it's basing this reasoning off the previous sets and the army building appeal. I would personally actually disagree with this, and I would steer clear of this set because of how much it's been on discount and how the clones that are in the set have been released elsewhere. But at a good discount, it could be a good investment. I just don't think it will be anything crazy. Another one popping up is the Gringotts Bank. Dungeons and Dragons again. A little caveat here, fair enough. My next prompt is to construct a Lego investment portfolio. I'm very interested to see how each AI interprets this. It's a very it's not a very in-depth prompt, but it's also going off the chat of the 2026 investment sets. So we'll start with ChatGPT. As you guys can see, my prompt was just simply construct me a Lego investment portfolio, and this is what it's done. It's assumed a £3,000 to £5,000 budget, which is fine. And Okay, let's go through this. This is pretty cool. It's got images as well. So allocate 1.2 to 1.5, 2 to 3 units. And this is an anchor, apparently. Star Wars consistently outperforms most themes post-retirement. I do beg to differ on this, especially in recent years. I do think the right Star Wars sets are still good, but Star Wars as a whole generally doesn't follow this pattern from what I can see these days. Like, I do have some good Star Wars winners, but a lot of Star Wars sets aren't as good anymore. That's my personal opinion from what I've seen. So we've got apparently a low moderate risk level, and the time horizon is 3 to 5 years. Okay, interesting. So yeah, I mean, considering that it has said that the time horizon will be 3 to 5 years, I do think this is pretty sound reasoning. We've got the Eiffel Tower, 2 units of the Eiffel Tower with a 4 to 6 year time horizon. Storage on this portfolio is going to be crazy, by the way, guys, because again, we've got another massive set here. Another massive set. Okay, and then we're only going for 10% of small liquid sets. And bear in mind, I'm pretty sure that this set is not even retiring. So Brick Fanatics actually have this set down to retire at the end of 2027. So I'm not too sure about this as a recommendation. Again, I do think ChatGPT is getting the retirement dates and set numbers completely wrong. But let's move on. So this is the portfolio allocation. I honestly I don't like this portfolio too much, to be honest with you. I personally wouldn't just solely invest in massive sets like ChatGPT is recommending, with only a 10% allocation to small sets, which it says are quick flips, but they're not because they're not even retiring. Anyway, the strategy was stability, growth potential from licensed sets, smaller sets help cash flow. I agree with that, but when you're only allocating £400, 10%, it's not enough. Buying at a discount, storing sealed, yeah. Expect 3 to 5 year hold. So that's a good caveat that it's mentioning. It's not saying it's going to be a quick flip or anything. Okay, interesting. Let's move on to what Gemini had to say for this prompt. As you guys can see, it's the same exact prompt. Average annual returns of 11 to 15% for Lego. Okay, so it hasn't really constructed me a portfolio here. It's repeated the sets that it's said previously. And interestingly, it's put the D&D and Zelda set in high risk level because they're speculative. And the UCS sets, I don't know where it's got modulars from, but because it didn't mention any, as low risk. And then growth, high percent returns on ideas and speed champions with a medium risk, which I agree, like you will get a high ROI, but it would be on a low value. For example, a £20 speed champion set. So Grok is trying to diversify the Lego portfolio to mitigate risk, which I like. It's prioritizing sets that are retiring soon or expected to retire by end of 2026. Great. I didn't even prompt it to do that. Kind of I did, I guess, in the first one, but it says that sets with exclusive minifigures tend to appreciate 50 to 200% within 2 to 5 years post-retirement. I don't know where it's got that information from, but I imagine that it's probably somewhat true. So let's have a look. So again, guys, we're going for, this is all in dollars, but we're going for a $2,000 portfolio with the ATT, Gringotts Bank, Eiffel Tower, D&D, Great Deco Tree, Paris, Love the Sea. I've got no idea what... Oh, I do know that set, okay. And then Hagrid's Hut, An Unexpected Visit. What? This set's already gone. What the heck? This, guys, if you don't know about this set, this was one of the sets that I picked up recently in one of my haul videos. Amazon have had it discounted heavily. As you can see, it's retired now. to £35. So I would ignore this in Grok's response because obviously it's sold out now in the UK. Maybe it's linking this because it's not sold out in the US. No, it is. I've got no idea why it's linking that. Anyway, let's have a look at some of this. So we're linking YouTube videos here. Interesting. Okay. DG Bricks podcast. I like it. So that's pretty cool that it's it's taken initiative to go onto YouTube to find out the sets to invest in. So guys, that was very interesting for me to have a look at. Now I know we only did take a look at 2 different prompts, but I will have a play around with this off camera. I do want to say though, what I've noticed is a lot of similarities in the sets that AIs are saying to investing. And this is something I've learned about. Essentially, what it's called in finance is called synchronized trading volatility, which is a risk of AI because if big institutions are all using the same AI to make decisions, when there's a negative reaction in the market, all the AIs will react in the same way. So that could cause a massive sell-off if all of the AIs are doing the same thing. Essentially, they're selling, and it's a loop. So they'll sell, it will crash the price. They'll see that it will sell, they'll sell even more. And this would be across all institutions. It's a pretty cool theory that I learned about, and the way I see it in application with Lego investing is that there's a lot of the same sets being mentioned for investing by the AIs, such as the big sets like the UCS Falcon, the Gringotts Bank. You could see them popping up, the Eiffel Tower, you could see them popping up basically across the board with all 3 of the AIs with the same prompts. You could see them referencing top 10 investment videos, top 5 investments, articles. And the problem I have with those is you actually want to steer clear of them, in my opinion. It's kind of reverse psychology, but I tend to look at the, top 5 Lego investment articles and videos as a warning sign that there's going to be overinvestment in them, in those particular sets, because if every Lego investor is buying those types of sets, then the supply on the secondary market upon retirement is going to be incredibly high. And we've seen this happen multiple times before with various different sets. So if anything, guys, I would take what AI is saying and maybe do the opposite of what it's saying, because it's gathering information from across the internet, which means that there's a lot of people saying the same thing. And with Lego investing, what my strategy is becoming is investing in sets that people don't have or people have overlooked, so that there's very little supply on the secondary market, meaning the set's rare and therefore expensive. But if everyone's investing in the same thing and there's like 200 or 300 copies of the Eiffel Tower on the market after investment, it's not going to rise in price like you'd want it to, and you're not going to see a good ROI for a long time. So it's definitely something to be mindful. But I hope you guys did enjoy the video. If I might do some more videos with AI if I can get some good prompts to spit out some good answers, and maybe we can compare how AI's recommendations do come 2026, or maybe in a couple of years, to see if it was correct in its reasoning and if I should have listened to it. But if you guys do have any thoughts, let me know in the comments. If you did enjoy the video, don't forget to like and subscribe. For now, guys, I'll see you in the next one.